Taxation Committee will come to order, please. First item of business, as always, is bill introductions. Do we have any requests for bill introductions? Seeing none, we will begin with our first item of business. This is a briefing on the history and purpose of federal conformity to the Internal Revenue Code, and we would like to welcome to committee Secretary Mark Burghardt, Secretary of Kansas Department of Revenue.
Thank you, Mr. Chairman. Can you hear me?
It's a little muffled. I'm not sure how close you are to the microphone, but we can barely hear you.
Sure. Is that any better?
A little bit, but not much.
Get the microphone. We don't have.
We can turn the volume up as high as we can in here, but beyond that, we really don't have any other control.
We're getting a microphone here. Should have it shortly.
That actually sounds pretty good right there, whatever you're doing.
Okay. Microphone's the least of our problems right now. We've got a little water problem up on the 7th floor of our building. We're on the 4th floor, and we're in the process of covering everything we possibly can to save it from water damage. So I apologize if you see people running in and out of this room. But thank you for the opportunity to comment briefly about the history of income tax conformity in Kansas. Really just wanted to provide some information that might put some of the bills that the committee will be hearing at some point in the income tax arena, put those bills into context with knowing perhaps a little more about the history of conformity and why we have it in Kansas, and really how long it's been a part of our Kansas tax system. Nearly 90 years ago, Kansas enacted its Kansas income tax, and a constitutional amendment was required at that time to basically put in place a progressive income tax. That was clear back in 1933 when we had that constitutional amendment. At that point in time, we had a statutory scheme that was put in place, and at that time, the Kansas tax statutes pretty much modeled the Internal Revenue Code. But that was back in the mid-30s. And there was a period of more than 30 years where the Internal Revenue Code changed dramatically, but the Kansas tax statutes did not, because we did not change Kansas law as federal law changed. Because at that point in time, we did not have prospective conformity. So after a number of years had passed, again over 30, the legislature determined that it was probably a pretty good time to revisit the issue and see what needed to be done to basically make Kansas law conform more closely to the Internal Revenue Code. So a special committee was appointed in 1965. It was a technical advisory committee, if you will, composed of a number of prominent tax professionals, legislators, and government officials. And at that point in time, they determined that the appropriate thing to do was to basically conform to the Internal Revenue Code on a prospective basis. So basically have our tax code conform as closely as possible to the Internal Revenue Code. And again, that study was taking place back in the mid-60s. What they discovered at that time, and the Attorney General at the time basically said, well, that's fine, but you will have to pass another constitutional amendment, because if you don't do it that way, there would be an unlawful delegation of legislative authority. And so that's why in 1966, there was an election And people of the state of Kansas basically approved a constitutional amendment that allows Kansas to conform on a prospective basis to the Internal Revenue Code. So this is what you commonly hear as rolling conformity. So that's kind of how we got where we are now. The concept of conformity itself, again, we really had it from the very beginning. It just was not rolling conformity. And there were a number of reasons put forth by the Technical Advisory Committee for why we should have prospective conformity. I had provided a committee just a short memo on this particular subject matter. And if you look at page 2 on that, it lays out basically the language of the Technical Advisory Committee, what they were thinking when they chose to recommend this constitutional amendment and a statutory scheme that would in fact conform going forward with the Internal Revenue Code. And a lot of these reasons you've already heard. Perhaps the one that we hear most often is that it's much simpler preparing returns and record keeping if you conform more closely to the Internal Revenue Code. Prior to prospective and conformity, taxpayers basically had to maintain 2 sets of books and file 2 totally separate tax returns. It was costly and expensive, or it was expensive and burdensome. And so the thought process was there is significant benefit to taxpayers from a cost perspective, and then also just basically a much less problematic process of preparing tax returns for tax preparers. What's that mean to the state of Kansas? You get better tax compliance, and you don't have to worry much about a fraud being perpetrated in the state. One of the other items that was listed by the Technical Advisory Committee was, again, item 2, which basically they thought that this would help eliminate unfairness to taxpayers. And essentially what you would have prior to prospective conformity, you might have a taxpayer who received favorable treatment under the Internal Revenue Code because the code had been amended over the years, but because Kansas law had not kept up with those amendments, you could get a totally different tax result at the state level. And it just seemed unfair to those on the Technical Advisory Committee that result should be achieved in Kansas. So again, another reason for prospective conformity. And then the last item that they mentioned was just ease of administration. And again, those of you who have heard debates on non-conforming bills before you, where decoupling became an issue, I'm sure you've heard comments from the department and others, just the ease of administration of having the state conform very closely to the federal return that's filed. And again, when you have a tax system that is less complicated, simpler to comply with, you're going to get increased compliance. So what's all this mean when, in practical terms? When the Internal Revenue Code has its provisions, and there's the federal 1040, you have all of these income sources taken into account, adjustments made to those income sources, and the funds or the amounts that are reported as those sources of income are identified, and you end up with a number which is federal adjusted gross income for individuals and taxable income for corporations. And what is so good about the conformity process is that that is where the Kansas tax computation begins. So when you look at your Kansas individual income tax return, we begin with federal adjusted gross income, and then we have modifications under our state law to that number. The benefit that flows to the state on that is that it truly does make the process much simpler. And in a moment, I'm going to talk a little bit about tax compliance and how much more of a comfort level the department has in terms of receiving returns that basically start with federal taxable income, again, for individuals, or federal adjusted gross income for individuals and taxable income for corporations. Because if there are going to be any issues with those numbers that we start with, the Internal Revenue Service will have gone through the process of auditing those numbers. And that was another major benefit of prospective conformity, is that it allowed the state workforce not to have to be increased to basically manage these returns that were coming in to the state of Kansas. You know, the state has an exchange agreement with the Internal Revenue Service, and we share data routinely. So if a taxpayer is audited at the federal level, we learn of those adjustments, and we address those issues at the state level. But again, Kansas does not have to hire its own staff of auditors to audit individual taxpayers. I've set forth on page 3, again, the consequences of not conforming to federal law, and I'm not going to go into that in any detail. I've already kind of summarized that in large part. If we don't, every time we don't conform to the Internal Revenue Code, and again, whether the state chooses to make certain adjustments from federal adjusted gross income or taxable income for corporations, if the state chooses to do that, that purely is a legislative decision. That's a policy decision for the legislature, and you know, the legislature sets the direction as to whether or not new modifications will occur. I would note on page 4 the number of states that do have rolling conformity. There are 20 states that currently have rolling conformity or prospective conformity, including all of our neighboring states. This is about the same number of prospective conformity states that there were back in the mid-60s when our constitutional amendment was adopted. So I guess just final comments here. Hopefully you'll have a better sense of why we have rolling conformity, what it means to the state of Kansas from an administration standpoint, as you consider legislation in the weeks and months to come that might deal with decoupling or electing to not conform with the Internal Revenue Code on particular items that might be before you. So with that having been said, Mr. Chairman, I'd be happy to stand for any questions.
Committee questions? Representative Gartner.
Thank you, Mr. Chairman. Mr. Secretary, thank you for that overview. Very quickly, you know, looking at page 4, you have the 20 states rolling conformity and 21 that have static or fixed. Is there any advantages that you can point out to static conformity?
I'm not sure I would categorize it as an advantage, but the legislature every year when and let me explain what static conformity is. I mean, it is conformity, but it is to a version of the Internal Revenue Code on a certain date. So if the Internal Revenue Service, if you're a state that has static conformity, if you have a year in which the Congress amends the Internal Revenue Code, the legislature will have to make a conscious decision and pass legislation if they want to then conform to the code on that particular date. So every time that the Internal Revenue Code changes, the legislature has to make a conscious decision whether or not they agree with those changes or not. And it would be easy to become out of conformity over a period of years to a pretty significant extent. Really kind of what happened to Kansas, you know, after we enacted our Kansas tax code.
Mr. Chairman, I guess the whole point, and I shouldn't have said advantages. I think some states believe there are advantages.
Can you pick us up again?
Yes.
Can you hear me?
Can you hear us again?
We can hear you. We're concerned that our water issue may be getting to some of our electronics and our wiring.
Okay. Well, we appear to have you back for the moment.
Okay, very good.
Did you have any?
Well, Mr. Secretary, and let me, I guess, rephrase. I didn't mean advantages. There are certain things, as you've already pointed out. It might be an advantage for the tax committee in a static conformity, not have to deal with issues for a period of time if you set that date whenever you have in your code or to conform. I was just looking at some of the states that are static, and they go back to 2017. Some states maybe even prior to that. So until they take action, they're still conforming or non-conforming or conforming with whatever occurred previous to that, correct?
That would be correct.
Okay, thank you.
Mr. Secretary, I had a question or a statement. I guess as we look forward at some of the, if we want to call it the term that we're all familiar with, the decoupling, as we look at the changes, the major overhaul in the federal tax code that came with TCJA, that was major overhaul at the federal level. And, I'll just use the example of the GILTI, the Global Intangible Low Income, Low Taxed Income. That was a brand new category of foreign income that was introduced. Now it's being a taxable income. However, our rolling conformity at the federal level, they created a new category of the income, but then they also created a deduction kind of as the carrot and the stick to get this income back into the United States. Where did the Kansas code fall short in the conformity where we allowed that addition to the income, but apparently that deduction did not come out of the taxable income or the federal adjusted gross income? That's why we have that discrepancy now?
Could be taken into account. Actually, Mr. Chairman, we believe that the deduction that's taken into account is taken into account at the federal level, and the amount that's included in federal taxable income is net of that deduction. Is that correct, Mike? Right. So the deduction was taken into account to reduce the amount of guilty income that is in fact included in federal taxable income, which is the beginning point for the Kansas tax computation. So that 50% deduction is allowed.
Okay, thank you. Committee, any further questions for the Secretary? Seeing none, thank you for the briefing. We appreciate the information.
Thank you
And
very
best
much.
of luck on the issues you have over there. All right, committee, we will now look at our next item of business, a hearing on House Bill 2186. And for an overview of House Bill 2186, I would turn to the revisor's office.
Thank you, Mr. Chairman. House Bill 2186 would allow a taxpayer to elect to apportion income based on a sales factor rather than the current three-factor apportionment that the law provides. The election would be available to businesses engaged in manufacturing, production of electricity, or storage of electricity, and certain agricultural activities. The taxpayer may choose the election for apportionment by including a statement in the income tax return, and the election shall be effective and irrevocable for the taxable year and the 9 following tax years. Also, the election would be binding on members of a unitary group of corporations. However, the Secretary, upon request of the taxpayer, may grant permission to terminate the expiration of remaining years of the election. And with that, I'd be happy to stand for any questions.
Thank you, Mr. Siebers. Committee, any questions? I guess I would just ask, just for my edification and for the committee, could you do a brief explanation of what is entailed in single factor versus three-factor apportionment?
Sure, I can take a stab at it. Current requirements for taxpayers that generate income in multi-jurisdictions, multi-states. And I can't really get into the fact of what other states do, but Kansas relies on a three-factor apportionment where they compare the sales, I believe, property and payroll for the state versus their global operations to determine their tax liability in Kansas. And what this does is it prevents duplicative taxing over the course of multiple jurisdictions. What this bill would do is it would limit what was used as the three factors down to a single factor for these specific entities when determining their Kansas liability.
Thank you. We have a question online from Representative Baker.
Thank you, Mr. Chairman. Adam, could you give us an example of somebody who would be involved in this?
Unfortunately, I'm not really at liberty to give names of companies. It would be someone who would have tax, liability in Kansas, among others, most likely other states. So if they operate in, Kansas, Missouri, Oklahoma, things like that, where they have income generated in multi-states, not just limited to those states, any state, which, a lot of companies are spread out across many states. That's who that would apply to.
Okay. Thank you, Mr. Chairman. Thank you, Adam.
Committee, any further questions? Seeing none, Adam, I just had one final. Just for clarification, this bill would require everyone to go to the single factor, or does it allow the people that use the three factor to continue using that, or is it strictly going to a single factor?
Sorry, I did check on the language. It would be an allowance, so it would be an election for these taxpayers who operate in these spectrum of industries would be able to elect this new single factor versus the current three factor that would apply for everyone else.
Okay, thank you. Any further questions, committee? Seeing none, we will move on to the next item, the fiscal note for House Bill 2186. And if Department of Revenue is back online, I'm assuming Kathleen Smith with Department of Revenue will provide us an overview of the fiscal note.
Yes, Mr. Chairman and members of the committee, Kathleen Smith with the Kansas Department of Revenue. We are estimating that House Bill 2186 would decrease the state general revenue funds by $20.5 million in fiscal year 2022 and forward. To come up with these estimates, what we did is we looked at the top 600 corporate income tax filers that had at least $1 million in taxable income, and found that around 200 of those filers would benefit from making this election to the single factor. And so that's what we based our estimate on, and it would again be a negative impact of $20.5 million to fiscal year 2022 and forward. One other thing that I would like to bring up, it does provide NAICS in the proposed legislation, which is great. A lot of those NAICS, though, are self-reported, so we are relying on what they are putting on the tax return. So depending on whether those are correct or not would kind of lead to our accuracy of our estimate that we have provided. So if those are not reported correctly, we could have a problem with our estimate that we've given you. And one other question that I would have with regards to the proposed legislation is the start date for this election. Usually when we are talking about for income tax purposes, we are usually talking about for taxable years commencing after a certain date. There is nothing in here that would provide for that. It is effective upon publication in the statute book, so that would be 7/1 of 21. So is it effective for tax year 2021, or did we want to go to tax year 2022? Our estimate is based upon effective tax year 2021. So we would just ask for some clarifying language in the bill that would provide for when this election is to take effect. With that, Mr. Chairman, I would stand for questions.
Committee, any questions for Department of Revenue on the fiscal note? Seeing none, thank you. We appreciate your input on the fiscal note. Committee, at this time, we will turn it over to our proponents for their portion of the bill. And I'd like to welcome first to committee, Eric Stafford with the Kansas Chamber.
Good afternoon, everybody. Thank you, Mr. Chairman and committee members. My name is Eric Stafford with the Kansas Chamber of Commerce. We are thankful for the opportunity to appear today in support of House Bill 2186. Good summary from the reviser, Department of Revenue. Obviously, the fiscal note impact as some businesses will be electing a new apportionment formula that would benefit their company. No surprise that there's some fiscal impact to the state. But ultimately what this is coming from is more focused on an economic development driver. The more under the three-factor formula that Kansas operates in my written testimony on the second page, I break out a table. There's basically 6 states left that utilize the three-factor approach. And you've seen a shift over the last decade of states making that transition. And one of the questions that was asked is this forcing everybody into single factor? And the answer to that is no, because our membership isn't fully in support of single factor, which is what led to the bill being drafted the way that it is. This issue came forward. We had if you guys recall, for the non-freshman legislators, lawmakers, we delivered in January of last year, gosh, it seems like forever ago because of COVID, but the hard copy of our Tax Foundation report. So we partnered with the Tax Foundation to do a comprehensive breakdown of the state's tax code, sales tax, property tax, income tax, corporate income tax, and delivered those hard copies when that report was finalized in December of 2019. January of last year brought that out. So right before the session, we weren't going to take anything other than what we had already been working on, decoupling, internet sales tax, some items that were in that book from their recommendations for our tax code. We weren't doing anything new. And so we asked our members, for anybody who wants to participate in the review of that, anything that we want to pursue in 2021. And the tax foundation says they're pretty agnostic on what apportionment method states go with. They don't really care. There's pluses and minuses to each. So we'll let each state decide what is theirs. But on that call that we took to our tax work group, which then took to our board of directors, a recommendation to support this legislation at our December board meeting, and our board approved in our new legislative agenda for 2021, is this shift in apportionment. And how we weigh that today is there's a formula that looks at the property, the amount of payroll, the amount of sales that the company has in the state. You average that out, and that determines their apportionment for their Kansas corporate income tax liability, because they have money that they're earning, and then how much is that attributable to Kansas. So they use that three-factor approach. States that are shifting towards single factor, they largely are looking at sales. I think it's 35 or 40 of them have predominantly a sales aspect, and then there's what in 29 listed that it's just solely focused on sales. That is beneficial for capital-intensive companies, companies that have large manufacturing facilities, or I know the agricultural industries heavily interested in this for their investments in the state. So the three-factor approach basically places a higher tax burden. The more you invest in the state in property and payroll, the more your tax liability is going to be. So the shift and the logic behind the single-factor approach has been, what can we do to encourage investment? You're still generating tax liability, but you're not going to penalize necessarily those companies that create that investment on the manufacturing facilities, bring more payroll into the state. That's been kind of the driving factors you've seen states shift to that approach in apportionment. So, like I said, I know when we had our call on in the fall for our tax working group, got feedback from our membership that not everybody wanted to make this change. I know some telecom members of ours were saying, no, we prefer the three-factor approach for us, not sure why. If they're operating in other states, it was one of those things I didn't ask. It was just, okay, fine, whatever our membership wants to do. So that's what led to the election that's in House Bill 2186. That election, if you'll notice at the very end of the bill, if you declare the single factor or three factor, you have to stay there for 10 years. So it's not something that we're going to just hop back and forth, and we might benefit one year, and if we're not going to benefit under that approach the next year, we want to shift back to the other apportionment method. This essentially is locking them in to the election method that they're picking. Second point, I mentioned the fiscal note at the very beginning. Because it's an election, I mean, if we just left it up to every taxpayer, the fiscal note is probably going to be much greater because everybody's going to take the path of least resistance, right? That's just natural inclination of tax policy and human behavior. We wanted to try to limit that fiscal impact, and again, trying to know that we have other priorities that we're pursuing. How do we want to address this? And we basically pitched our membership that if you want to be included in this bill, let us know. So we felt like it's pretty tightly crafted to those who are interested in this. You're dealing with manufacturing, you're dealing with agriculture, you're dealing with electric generation, largely wind energy in this proposal. But manufacturing is pretty broad. When I was going through the NAICS codes here on my phone, I'll pull this up. It was 31 through 33 of NAICS codes in manufacturing. You have anything from there's the food manufacturing, you have manufactured homes, you have pulp mills, you have newsprint mills. There is books printing, commercial screen printing, asphalt, shingle, and coating materials manufacturing, basic chemical manufacturing. So I mean, it's very diverse. It's not just, oh, there's 2, 3 things. So I don't want to mislead you by saying, oh, there's only NAICS codes 31 through 33 in here for manufacturing. Know that those are pretty pretty broad. I mean, there's a lot that can be included in that. But again, it goes back to the reason behind it. Those are the capital intensive, labor intensive type of industries. Pharmaceutical medicines in here, 3254s, paint coating and adhesive manufacturing. So it's pretty broad, but it includes agricultural components as well as more product or service based on there too. So, but that said, we wanted to make sure that we were encompassing our membership's desires. I will say that we got some late feedback. There's 2 NAICS codes in our testimony that we cite that we just got feedback late from the point in terms of getting the bill draft to the reviser and got that started and just didn't get those added. So that was on us, not anybody else. So I think that's it. That's the nugget of what we have to say. But be happy to answer any questions and would appreciate your consideration for this piece of legislation.
Thank you. Committee questions? Representative Clayton.
Thank you, Mr. Chair, and thank you for being here today. Whenever we tend to look at these breaks that have fiscal impacts, in particular because this one has an effect on the manufacturing sector, which I think we can all agree has taken a major hit. Any guess that you have as to how many, well-paying jobs this will allow people to create? Because I think we want to, that's all our goal here. So any idea that you have or anything you can speak to regarding that?
No, not specifically. I hate to speculate, No, you're okay. It's a good question. I'm trying to find the right answer for you. And I think I've said this before, I mean, tax policy is what gets a lot of the attention in the newspapers and all that in terms of, what's going to grow the state. It's a big piece of the puzzle. I think if it's one piece of the puzzle is what I'm trying to say, but it's a big piece. So to say, what will this bill generate in terms of investment? I don't think we have quantified that. I don't know if we can. But I think anything that encourages that type of investment, we obviously would support. Again, our focus here from our organization's perspective is the desire to grow the state. We've talked about this on a variety of topics. I can't quantify what this one proposal would do, but from our manufacturing members that brought this to us, that was their big driver is, look, we're getting penalized for the capital investment, for the payroll, for the jobs. But if you look at some of the jobs that are out there in manufacturing, whether they're engineering degrees or PhDs in chemistry, that they're very high-skilled, highly trained, and educated professions.
Oh, no, right on, and thank you so much. I would love it if you could talk to some of the folks, especially in the manufacturing sector, and get back to us with some more definitive numbers, because if we're going to be chipping away at the SGF, then we want to make sure we're making Kansans independent, since we won't be able to help them because we'll have to erode core services. So,
all right.
Thank you.
You're welcome.
Committee, any other questions? Mr. Stafford, you kind of answered a couple of my questions already. I was just curious what the methodology was for selecting those NAICS codes, but it sounds like it was just anybody that wanted to come forward, if they wanted to have their industry included in that, that's where you came up with those?
Yes, Mr. Chairman. Driven. We don't want to just leave it open. So come to us with if you have the desire to be included. That was how, those were drafted based on the feedback that we got.
Okay. And you heard the Department of Revenue speak to I guess you'd call it the implementation date. Do you have any?
I think we've been operating under the assumption 2021 tax year, which would be next year. I think we're currently 2020 tax year. So yeah, going into effect next year is, I think, our desire. But if we need to get some clarifying language, yeah, I noted that. We'll be happy to clear that up if we need to.
Okay, thank you. Committee, any further questions? Representative Turner.
Thank you, Mr. Chairman. I guess, so you said that there are currently, let me see, I scribbled it down, 6 states that still have a 3-factor, is that correct?
Correct.
So most go with a single, and that single is sales.
Yeah, the 29 states use sales. Let me get my testimony pulled back up.
Sales. So they attribute, I'm trying to decide how you would slice sales from, if you had a company operating in 6 states, I guess it's another question as to how you identify which sales are attributable to Kansas. Obvious, you know what I'm saying, out of your entire sales lot that you have, but.
That is, the sales factor is your sales, I believe, within the state for your liability.
State.
Yeah, you have your 29 states that are single factor sales. Then you've got 8 states that have a 50% sales or greater, and then another 3 that are greater than 50% sales factor. So overall, you have 40 states that put an emphasis on sales over just the payroll property, more traditional approaches that had been used in the past for apportionment. And again, you're taking, the whole purpose here is you got companies operating in multiple states. Well, how much is that attributable to Kansas? How much of that income? So that's what they're trying to get after here is how much do we apportion to each specific state, and how are we going to weigh that income? And you're weighing it based on that formula, if that makes sense.
Yes, it does. And a couple of those factors, like their investment in the state, would also be hit with property tax, right? I mean, it's seems like it's being used twice. You're getting hit on, heavier on the income tax and heavier on property tax because you do have investment in the state.
Yeah, I mean, and just as a reminder for committee members and new lawmakers, that in the Constitution, business, industrial, commercial property is assessed at 25% versus 11.5% residential. So we're assessed at a higher level than residential property is. So when you have $1 million commercial building versus $1 million home, constitutionally, you're just automatically going to have a higher tax burden on your property taxes because of the classification. Utilities are 33%, so utilities have a much higher tax burden as well. So that's in play too.
Thank you.
We have a question online from Representative Stogstill.
Yeah, thank you, Mr. Chair. We seem to be looking at a couple of bills that may decrease our revenues in Kansas by $1 billion over the next 3 years. Is this at $22 million a year? Is that $66 million on top of what would be asked for in those other pieces of legislation?
Yeah, this proposal is entirely independent from the decoupling bill that was passed by the Senate. Very sensitive to that fiscal note that on the version that was passed by the Senate. And, you know, Representative, we had been operating to do everything we could to keep that fiscal note down in the Senate. And some things, as the debate unfolded, were out of our control. So we'll be reevaluating what to do, but I promise you that the bill that we were involved in, there are many components added to Senate Bill 22 that we did not have a position on. Yeah, so did I navigate that okay?
Okay. Thank you. Thank you, Mr. Chair.
Thank you, Representative. Representative Day.
Thank you, Mr. Chairman. Is this the right, my mic? Okay. I am just trying to wrap my brain around this and explain it to someone who doesn't have any experience with the manufacturing, you know, and anything along those lines. So are we saying that these companies would only have to pay tax to Kansas based on the sales that they do in Kansas and not on the property, not on the income that they?
Yes, but it's dealing with, again, Corporation A has $100 million nationwide of income, subject to corporate income tax. How much of that is attributable specifically to Kansas?
Okay, so they would be manufacturing here, creating the
or everywhere.
Product
say they're operating in 8 states.
Okay. Okay.
So how do you take that whole pie of income and what do we owe in Kansas for our Kansas corporate income tax? We have facilities here, or
Right.
we might just have sales here.
Okay.
right?
But, so they wouldn't be able to sell an eighth of what they do if they didn't manufacture it here in the state. We don't get the benefit of that, even though they are still working and doing and creating here in our state.
Say that question again. I want to make sure, I think I understand what you're saying.
Right.
But I just want to make sure I understand.
So they might have, you said 8 facilities, or in 8 states, they might be creating this product that they sell. So if they're still doing something here in Kansas. If we took us out of that equation, they wouldn't be able to make as much product to sell.
Arguably, maybe they make more in Nebraska or South Dakota.
Might take it also.
But our point is they're employing Kansans. And
those Kansans are paying their taxes.
and they're paying property taxes on the facilities here, and they're paying
Okay.
income taxes. Those people are buying houses. So yeah, that's encouraging those jobs and investments. You're going to get the income taxes on the employees. You're going to get the property taxes on the facilities and homes that are owned or bought by employees. So that's where the benefit comes in, is the jobs and impact there.
Okay, and job creation wise, that was a question that Representative Clayton had asked, and you're going to get that information.
Yeah, like I said, I don't have any specific numbers that have been given to me, but I will look. I'm going to see what I can find from other states that have experienced this, and what, if we can find, if anything, that's attributable or not attributable to the policy change. But the economic side of the policy change, I don't have numbers on that, but I'll definitely look it up.
Okay, great. Thank you so much. Thank you, Mr.
Absolutely.
Chairman.
Representative Helgerson?
Two quick questions. Sounds like that a corporation that has it sounds like that a corporation that has its home office here in Kansas, but does most of its business nationally or internationally, would fare far better under the terms of this the bill. Is that correct?
Probably depends on the type of business that they have here in the state.
Okay.
So some that are here that are more, if it's a service-oriented type of business, probably no impact, because they're probably going to stay with the 3-factor approach. They're going to stay with where they're currently at. Some might make the change. So I don't think you can I don't think you can broadly say businesses that are here. It's going to depend on the type of business that it is.
Second question. As you're well aware, we have to make tough decisions all the time. Bill that we had or the bill the Senate had, was it $130 million?
The decoupling, I think out of committee is probably closer to 170 that first year, and then 120, 130, but just trying to go off the top of my head.
The amendments make it almost impossible for us to put a budget together, a realistic budget together. Are you going to urge people to control their appetites and do something reasonable so we could come up with a reasonable solution?
Yeah, fair question.
we
Reasonable is in the eye of the beholder. Our bill is passed by, or the bill passed by the Senate Tax Committee was reasonable and in our view, but we were getting some pushback there too. No, point well taken, and yes, as I was trying to gently allude to, we're trying to navigate a path forward, more back toward what was closer to what passed the committee, in our view. I think there was a lot added there that we don't disagree with the policy, but our preference would be, let's have a decoupling debate, and if you want to have a Social Security and retirement income tax debate, let's do that later. But unfortunately, the policies got blended.
You and I talked about in previous years an economic development policy that had a tax system that encouraged economic development. But if we reduce so many taxes that it eliminates core services, then we may shoot ourselves in the foot. And while we head down this direction, those of us that have some tough fiscal decisions, would appreciate a level head as we head down this path.
Yeah, and that's a good comment, Representative. And I'd say that there's two sides to the tax coin. There's the government side and government efficiency side and delivery of government services. You know, no state has to provide a different service than any other. I mean, we all have roads and schools and fire stations and police stations and courts and corrections officers and Medicaid. And I mean, we all have the same services that we offer. There's states that are just do it a lot better. We're third in the nation for public sector employees per capita, largely driven through local government. So, you know, if we want to create a climate that requires, that generates economic growth, there are going to be tough decisions on the tax side that have revenue implications, both subtracting revenue, but then potentially adding through some other provisions. I mean, some of the provisions in the Tax Foundation study are, look, these tax credits aren't really used, get rid of them. Well, okay, we want to get, who's the contract lobbyist sitting in the back room here I can pick on, you know, get them employed, then let's go after those. But those comprehensive types of changes, I think, go hand in hand with how do we deliver government more efficiency. So, you know, cutting taxes is not mutually exclusive to cutting the neck and throat off of government, but, you know, we can surely find a way to deliver government cheaper than where we currently have it. Part of that's probably through attrition as you know, rural communities are struggling and you know, there's ebbs and flows, and maybe there'll be a rural just insurgence over time as people get sick of urban population density. So who knows? But I mean, it's not just a single. I mean, as I was saying earlier to Representative Clayton, it's not the puzzle. Tax policy is one part of the puzzle. Infrastructure and for needs of the business community, and not just roads. And we're talking water, wastewater. We're talking internet. All of those issues matter, and it's how do we do it better is, I think, what we need to look at difficult decisions. I mean, our tax policy, by and large, is pretty mediocre.
Next, I have Representative Bergkamp.
Thank you. Looking at the list of single sales states, it appears very few have exemptions to them. It's either everybody's in the same bucket or not. Do you know if Kansas has ever looked at just everybody being in the same route, or is this, I guess, the only bill that we've looked at?
On the apportionment itself, there was discussion. I was actually talking to Ken Eccles today about this. I think it was like 2011, 12-ish, roughly. There was discussion, but that approach was entirely single factor, not taxpayer election. So at that time, we as an organization were not interested in going that route, and we opposed it. I don't know how extensive those discussions were, but I know it was something that was talked about one of those years. Thinking it was, Ken and I were thinking, I think it was 2011 before the 2012 income tax cuts, if we recall correctly.
Representative Woodard.
Thank you. Thank you, Mr. Chair, and thank you, Eric, for being here today. I have a couple of things going against me. Wi-Fi issues, and maybe it was already mentioned, but I'm not able to pull this up. And then maybe it's a question that you can answer or research, but how many other states allow elective single factor?
Yeah, we'll have to get back to you on that. Missouri used to be an election up until 2 years ago, maybe. Then they just went single factor. I think I'm remembering that correctly in terms of the time frame. But recently, Missouri just switched entirely to single factor, but they had an election formula. I think our language is heavily drafted very close to New Mexico. So New Mexico gives that taxpayer the election. So that is largely where kind of the framework of our language came from. But I'll check to see if there are some others that are out there that have the election that I'm unaware of.
Thank you. Another member of the committee indicated that they think that there are 2. So if we can get confirmation of that, that would be helpful. Thank you. Thank you, Mr. Chair.
Not very many, Representative.
As we see how our sales tax exemptions go, Is this something that in the future, more and more people will come to the legislature wanting to jump on, and eventually we will be a full single factor?
I don't think so. You know, that would be probably one of the tougher decisions where, or discussions where there's companies who just don't want to make this change. So I think largely I mean, are there going to be people that come back in the future? Yes, potentially. So I don't want to leave the impression that the answer is no. I think apportionment's a little bit different too. People pretty much know where they're at and where they want to be. But yeah, I think that the input that we have is pretty diverse in terms of the folks that we have been talking to from the business community, ag interests and retail interests and telecom interests and service. I mean, I know I got an email from one of our engineering companies saying, hey, not really tracking this. Is this something that we need to be concerned about? I said, no, this isn't, I don't think anything for you guys. He's okay, yeah, fair enough. So I think we have a diverse enough membership to get a pretty good picture of who wants to be under this election formula.
Representative Gartner.
Thank you, Mr. Chairman. Thanks, Eric. Quick question. Under Senate Bill 22 and guilty, and looking at this bill, are there some cross-sections, some industries that would receive both a reduction in guilty and some savings going to a single sales factor?
Yeah, there are. I'd say there are, you know, in some of the conversations we've had in the past with elected officials on the decoupling stuff is, you know, can you pick one? So just real quick background, I know we talked roughly about decoupling and all that. So you got the guilty provision. There's two main cost driving provisions in Senate Bill 22 on the business decoupling piece. There's guilty, global intangible low tax income, and then there's the 163J business interest deductions, limiting the amount businesses can deduct on their business interest. Those are the two bigger fiscal pieces of Senate Bill 22 from the business community's standpoint. There are some members who care more about the 163J piece. There are some members of ours who care more about the guilty piece. So I think I can say that there are members who care about both independently, more so than the other. So I don't think we can say that this bill only benefits the companies who care about guilty, because I know that there are companies that asked for this bill who care about the 163J piece. If that makes sense.
Yes, thank you.
Sure, thank you.
Committee, any further questions? Representative Wassinger.
You guys are making me thirsty.
Thank you, Mr. Chair. Maybe I missed this. What was the percentage that you felt of your members that wanted it versus the other? Did you tell us that?
I did not. Gosh.
That's okay. You can.
Yeah, I'd hate to speculate. I don't think it's the majority. And Randy, I know we've had a lot of discussions. I might talk to Randy about that to see if we can get an idea. I think it's less. Wow, thank you so much. This is fantastic. Thank you. Thank you. No, I would say it's less than half. But again, I don't want to leave the impression to the committee that that's going to be the case, and then we have 60% of corporate tax filers go out there and take advantage. I don't think that would be the case, but I don't know. I don't know.
Fair enough.
I could try to find out.
Mr. Chair.
Representative Stogstill, do you have your hand up still, or is this a new question?
I have a new question, Mr. Chair.
Go ahead.
Yeah, this is in reference to the questions that were asked by Representative Clayton and Representative Day. And to Representative Clayton, you couldn't give a number of projected new jobs that this would create in Kansas. And to partly in answer to Representative Day's question, you said the state would benefit from increases in income taxes and property taxes, but unless their facilities are expanded and they do create jobs, I don't see any increased economic benefit to the state. It looks to me like that would only increase corporate profits. On a bill like this, would your organization, if it was passed out, would it have an objection to being passed out with, say, a 3-year sunset so that we could assess whether or not facilities are being expanded and jobs are being created?
I have a series of questions, it sounds like, to get back with you guys. More than happy to ask our membership if that's the case. I would say if we're going to sunset this, we should probably tie it in at least with the 10-year election period that is in place, just because of the uncertainty that could provide, is saying, hey, I'm going to go ahead and make this decision as a company to take that 10-year election window only to have it taken back in 3 years. So that would be my only off the top of the head comment, Representative, but more than happy to pose that question to folks to say, it's kind of like, our incentive programs, HPIP or PEAK. If something's not working, then let's reevaluate. I think we're always trying to constantly reevaluate our tax policy. So I don't know if there'd be objection to that other than being too short of a time frame, but definitely more than happy to ask that for you.
Thank you. Appreciate it. Thank you, Mr. Chair.
Representative Corbett.
Thank you. The thing it looks like to me, Mr. Stafford, is that businesses maybe want to come here or stay here if they were a multi-state business. Right now, Kansas is really not a spot that they may be looking at to invest money. This may give them a chance to make that second or third state to come and do business and hire a few people. So
that's the hope. We do have some good investments. I know there's some good investments in the central part of the state with some multi-state, multinational companies that have invested in the McPherson, Salina, Wichita area. You start getting out too far west where there's a pretty high property tax burden in terms of the mill rates. It's a deterrent for bigger facilities like that. Not to say it's not possible. Southeast Kansas, I think there's some pockets there that have some high industrial property tax burdens. But overall, I mean, we're trying to advocate for policies that help the business community. So Kansas is considered for investment. I mean, that's our goal. We want to grow. The more jobs we have here, the more money we have to spend on the key services that you all are elected to fund.
Well, with that, Mr. Stafford, thank you for taking the marathon of questions.
Absolutely, anytime.
Hopefully we saved some for our next verbal proponent.
Yeah, well, and I'll just say, Mr. Chairman, that this is a new policy piece. This has not been debated here before, and good questions, and I think I like the critical thinking that this committee is doing so far. So thank you so much for the opportunity today.
Thank you. Our second conferee is Randy Stuckey on behalf of the Kansas Grain and Feed Association. Welcome to committee.
Thank you. Mr. Chairman, Randy Stuckey, Kansas Grain and Feed Association. I don't know if I've been before this committee yet before this year. Usually I'm here quite a bit, but so I represent the grain handlers in the state of Kansas, and as has been mentioned, our association, our industry met with the chamber on this issue a couple years ago when conversations first began. To be sure, not all of our members operate in multiple states, but there are some that do, and there's continued consolidation in our industry. There has been for the last 30-some years, and as we continue to consolidate, we're going to have more and more presence in multiple states. For those members of ours that are positioned in multiple states, this is an important issue to them, right? Clearly, Kansas is in the minority of states that have a multifaceted methodology for finding the, or portioning the amount of net revenue, net income that's taxed in our state. If most of the states that, and it seems like they are, that our members are present in are using a sales factor, single factor based on sales, the amount of sales in the state to apportion their amount of income, net income that's to be taxed in a certain state, but yet Kansas, another state that they operate in, is using this three-tiered system, this different methodology. I'm not a tax attorney, but I can't imagine how difficult that has to be to apportion, find the right revenue stream to be taxed in Kansas versus the other states that they do business in and have assets in and employees and sales. So it's for that reason that there wasn't an overwhelming number of our members that came to us and said, hey, this is an issue for us. We want to change the revenue, the apportionment system in Kansas for single factor of sales. But there were a good handful that did. And for that reason, we did join in support of this bill. You'll recall that this is an election. This is not a full-fledged turn to single-factor sales. There are companies in the state that don't want that. So as an election, it makes sense for a limited amount of those companies that clearly will derive a benefit, right, from moving to this different methodology. We're not trying to hide the ball there. You're not going to assume that different methodology for 10 years if you're not going to derive a benefit. But I think Mr. Stafford is very clear, and I think we all understand that companies, like some of my members, have options, and they have options to invest in neighboring state of Missouri or Oklahoma for new ag commodity processing centers, or maybe they're going to set up a pet food line, right? These are jobs that bring in well-paying jobs of 50 to 100 people, and they happen all the time. So that's why I think it's smart for the state of Kansas to look at something that would encourage businesses. Maybe this is a different way of methodology for apportioning their net revenue in the state. Look at that as a way to drive and keep current investment and drive future investment in the state. So I think it's smart policy. That's why we're behind it. That's why our members want it. And certainly would stand for any questions. But it is just those companies, those industries that have come to the chamber and said, yes, we want to be a part of this, or at least some of our members do. And it's those NICS codes that are listed in the bill. That's why it's limited in scope. And I don't think that we'd necessarily be against a sunset so long as it's not a 3-year. We're trying to get consistency in the state and tax policy. That's important to all corporations, certainly in this instance, when you're trying to apportion your income between states. So I think maybe a 10-year would be certainly a lot better of an approach for that consistency. Again, with trying to apportion one set of income, Mr. Stafford said, well, if you have $100 million and you're trying to portion that income so it's taxed once in one state, or the states that you're located in, then it's important to have consistency in tax policy. And I think this is moving in that direction clearly. When I think it was 40 states use some sense of some type of sales apportionment in their apportionment scheme, this is the way to go. So with that, I would stand for any questions. And on agriculture, our interest here is grain processing. I mean, there might be other ag interests as well, but ours is grain handling. So thank you.
Thank you. Committee, any questions? Well, I can't let you get off that easy, so I've got one for you. I'm trying to wrap my head around probably just the grammar here. Maybe I'm not understanding it correctly, but I want you to put yourself in one of your members, just for an example, put yourself in their shoes. When I hear about apportionment of the business income, the tax liability, if their tax liability in Kansas is reduced because we move to this single factor system, or election or not, I'm just talking from that example member's perspective. Would it not be true that since it's apportioned, it's determining how much is for each state or what their income is in each state, their tax liability? If their Kansas liability goes down, does it not increase in another state where perhaps the the proportion increased?
That's exactly right. It's net net. Now, there may be an exemption or some kind of a tax credit in another state that they exist in, but that income will be recognized in that other state. And that's the whole point here, is that they are going to pay a tax on that income. It's just, where do you pay that tax? Where do you recognize that income to be taxed? And so, yes, if it's reduced in Kansas based upon this methodology, wherever else they're located, that income is going to be apportioned and recognized in those other states.
So to the actual member, unless there's a decrease in the rate in a different state where they see a higher proportion, is there truly a savings to the business entity?
Well, that's why you would take the election. If there is a benefit to you based on some kind of a tax credit in the other state that you would recognize that income in, or a lower rate. Otherwise, it's a wash. You know, you wouldn't do. I will say that there's something to be said for having the same type of system in Kansas as, say, Missouri or the other states. So it's all based on sales, not based on sales in these 5 states that I'm located in. And then in Kansas, I have to somehow reconfigure for these other 3, property, income, and personnel. And I'm not sure how that works. I mean, it's probably something that Kathleen could walk us through in detail. But clearly, that would be a lot easier to have a sales factor in Kansas as well as the other states that you're located in. So not just the tax savings, if there is, or the tax shift to some other state location, taxing jurisdiction, but just the way that you apportion. I'm using the sales stream to apportion my Kansas revenue and my other revenue in the other states that we're located in.
Right, and I think that's where my confusion comes in, is if a state, looking at the list here of the states that do have 3-factor, we do have one neighbor, Oklahoma, but Missouri, Nebraska, Colorado, they're all different. So it becomes really convoluted on how you address that income in each state. Committee, any further questions? Seeing none online or in the room. Randy, thank you very much for your testimony. We appreciate it.
Thank you, Mr. Chairman.
Committee, I will draw your attention to written-only testimony proponents Kevin Walker with the Overland Park Chamber, Jason Watkins, Wichita Regional Chamber of Commerce, and Don Brown from Cargill. I do not show any further proponents, so we will close the proponent section of our testimony and open up for opponent testimony. All I have listed is written testimony from Emily Fetch, Kansas Action for Children. Is there anyone wishing to appear as an opponent to House Bill 2186? Seeing none, we will close opponent testimony. I have no neutral. Is there anyone wishing to appear as neutral on House Bill 2186? Seeing none, we will close the hearing on House Bill 2186. Committee, that concludes our business for the day. Thank you very much for your time and attention. We are adjourned.